For Morningstar, I'm Jeremy Glazer. The U.S. economy added 209,000 jobs in July, but I'm here today with Bob Johnson, who's our Director of Economic Analysis, to see just how high quality some of these positions were. Bob, thanks for joining me.
Great to be here today.
Let's start with that headline number, plus 209,000, a little bit above your expectations of 200, below, maybe the market's 230. How do you look at these numbers?
You know what? It's a very evened out number, and I feel a little bit more confident that this is kind of the right number. The 209 also paradoxically is the same number for the previous 12 months, so we're right on the average right now. We had a really great June number, which made up for some bad numbers during the cold winter months, and now we're kind of back to the average numbers. The numbers are finally starting to make more sense again. The year-over-year, month-over-month data are both good. We're at about 2% growth in the private sector, 1.8% when you throw the government workers in, which is very consistent with the kind of 2% GDP growth that I've been talking about.
Where is this job growth coming from? I know there's been some talk that, it's just restaurant jobs, it's just hotel jobs, relatively low-paying positions. What sectors were adding in July?
Well, this was a good month for the quality of jobs. Actually, if you look at service sectors jobs, not meaning to demean anybody that's in those industries, they just tend to be lower paying or lower hour jobs, but the number of services sector jobs was considerably below the 12-month trend. Meanwhile, the construction jobs, the manufacturing jobs, the mining jobs were all above the trend of the last 12 months, maybe even double what the last 12-month trend has been. So that the quality was very good. Restaurant jobs were a little slow. Hotel jobs were a little slow this month. So the sectors that have been growing like a weed, everybody's been criticizing, well, now the growth's come in other parts of the economy, and we still held up the overall jobs growth number pretty well.
What about education, healthcare, sectors that had been doing a little bit better over time?
Yeah, that's one that had really kind of let us out of the recession. A lot of people went back to school, went to these private colleges to get their skills, the for-profit schools. And now that we've gotten a better economy, not so many people are doing that, and the government investigations and shutting down actually some of the schools has started to hurt the numbers. So we were actually down this month in education workers. And then the other number is healthcare. We thought with the Affordable Care Act that we'd see a big jump in healthcare usage, which would mean you need more healthcare workers, that you have more hospital utilization, and that just hasn't happened yet. We thought the Affordable Care Act might be a big boost to at least the employment levels, and it hasn't been so far. And the number this month, again, in healthcare was disappointing.
How about hours worked? Are new workers really being brought on more part-time? They're just kind of firing one person and bringing on two part-time people. What's happening there?
I get more questions than that than anything else in my weekly columns. And, it's really not what's happening, at least on a broad scale. And the way we could detect this is that we go through and look at the number of hours worked. And the number has been 34.4 hours per week or 34.5 for each of the last 12 months. If we had seen a dramatic increase in people saying, well, we're going to take this 36-hour-a-week job and make them 218 jobs, it would show up really fast in the hours work data. I mean, they don't separate out part-time and full-time, and they take the raw number, and that's what the numbers come out to be. And so that would say that we really haven't done that en masse. I mean, we lost maybe 0.2 of an hour in the retail sector, so maybe there's a little bit of that going on. But in the hotel sector, we've added 0.3 of an hour over the last year. So I don't think there's all this massive swapping out that people think is going on.
The unemployment rate ticked up to 6.2%, just a little bit from 6.1. How do you think about the labor force participation rate? Think about the number of people looking for jobs. Is there a huge group on the sidelines that's really going to be coming back into the market as things get better?
I do think that the participation rate's a little bit misunderstood over time. So much of the reason that number has come down, and it's still relatively near record lows, is because we've had these the baby boomers that were stuck in the market, so to speak, because their 401k programs and so forth being so underwater. And I think now that those have come back, those people have all started to retire. And I think as that happens, they're still counted in the labor force. The one thing that people don't understand about the participation rate, that your 90-year-old great-grandfather is still counted in that participation rate. You don't stop counting in that at age 65. And we've gone from being a pretty low proportion of people over 65 to a steadily growing one, and that's going to continue over the next few years. So that reason for the participation rate changing doesn't bother me at all. And then at the other end, we've had some favorable things happening with people staying in school longer and concentrating more on school when they're there. And so we've seen the participation rate fall a little bit because of people at the low end of the scale. People aren't dropping out of high school and going to a job anymore. And is that a bad thing? I don't think so. So I'm a little less worried about the participation rate than most. I will say this month the number ticked up a little bit. I think people are more encouraged about the job market, and maybe a few more people entered the market this time around, and it caused the number to tick up. And so I'm not worried about that tick up. And I still think we'll be below 6% on that unemployment rate by the end of the year.
How about the long-term unemployed? Are they finding work?
Well, they're doing something, that's for sure. As we look in the report, over the last year, the people with 27 weeks or more on unemployment dropped rather drastically from 4.2 million to 3.1 million. Now, whether people completely dropped out or whether they found jobs, I don't know. But at least the number isn't as bad as it was. And I think there are people that are struggling that are of a certain age, that have a hard time retraining and finding jobs. And there are certain skill matches for certain jobs that just aren't around anymore. And I think it's probably still an issue.
With the quality job growth we saw in the month, though, it certainly didn't translate into a lot of wage growth, only a penny increase. How do you think about, or what's the right way to think about wages? Why isn't this number growing faster?
Well, you know, I've been troubled by that number, too. And then I always kind of forget my old mantra that you really should look at most economic data on a year-over-year, 3-month moving average basis. And there, the wage growth, hourly wage growth, is stuck at kind of 2 to 2.1%. I mean, it's not a great number. It doesn't indicate that we've got real strength in the economy, but it doesn't indicate the weakness that we've kind of seen the last few months in the month-to-month data. And you know what? The seasonal adjustment factors here are an issue. Which month somebody gets a raise is an issue. So this averaging look year over year is a much better way to look at the data. And again, I'll be honest, it doesn't show like we've got great improvement, but it's not a market where there's absolutely no wage growth, which is what today's report frankly said.
Bob, I appreciate your take on the report this morning.
Thank you.
For Morningstar, I'm Jeremy Glazer. Thanks for watching.